All right, welcome back to the channel. This is my third time recording this, so if you like it, please hit the thumbs up and leave a comment down below. But we're going to do a stock market update. My computer's been slow, so hopefully we can get through this video in one take this time. So, um, stock market update, I'm going to try and do these every Friday when I'm in town. So we've got a heat map here of the stock market. This is a 1 week heat map, and we can see that we're seeing a little bit of selling in some of the big cap technology stocks, and we're seeing that money flow into the rest of the market. So we're seeing some of these big large cap stocks selling and going into some of the small cap companies. And we'll talk about why that is in just a moment. So just a little bit of a rotation. When we look at the charts here, the NASDAQ hit an all-time high this week. We had a nasty sell-off on Thursday when the CPI number came out. That was a golf ball that just hit my house. So anyways, moving on. The Russell 2000, this is the small cap stocks. They're getting a little bit of a bid here. Big breakout here. This line I've had on here for a couple years, I think. And so we're just now getting back above this line. Hopefully we can stay above this. We are nowhere near, or we're getting near the all-time high on the Russell, but we've got a long way to go compared to the NASDAQ and compared to the S&P 500. S&P 500 also hit an all-time high, had a little bit of a sell-off as well on Thursday, but not as large as the NASDAQ. So indices are looking good. A little bit of volatility, and a little bit of market rotation, which is going to be interesting to see if that continues to play out. The news this week, we did have the inflation numbers. The CPI came in. And the CPI came in cooler than expected. It was actually negative month over month. So the consumer price index went down month over month. We are still up 3% year over year. So prices are 3% higher this year than they were last year, but prices are down slightly this month than last month. So this is good. We haven't seen this, I don't think, in a long time, deflation month over month. So that is a good sign. That is good for the Fed. They want to see inflation keep coming down. We'll see how long that lasts. It's just 1 month. Let's see multiple months, and let's see if we can get closer to their 2% target. The Fed did speak a lot this week. They were talking with Congress and Senate, which is always a dog and pony show. But they're saying the same things. They're waiting to see some real weakness in the employment market to really make a move. They're done raising rates. Their next move is going to be a cut. We just don't know when that'll be. When we look at interest rates, come on, computer. There we go. We're seeing them come down. So we had the big increase. We had a drop. We climbed back up. We're starting to come back down now. So because we're seeing interest rates come down, meaning people are buying bonds, locking in the yield because they're expecting the yields to come down, which the Fed is most likely going to cut rates. That'll be their next move. So people want to buy bonds now before the rate is under 4%, 3.5%, whatever that'll look like. So that is why we're seeing the Russell get a bid, because a lot of these companies, these smaller cap companies, they need to borrow money for their operations. When it comes to big technology stocks, they're not interest rate sensitive. I don't want to say at all, but they can withstand interest rates being high, interest rates being low. We've seen them perform really, really well in this higher interest rate environment. So Microsoft, does it matter to them if interest rates are 5% or 1%? They're loaded with cash. If interest rate is 5%, they're going to take advantage of that, and they're going to gain more money on the cash that they have, gain interest on their cash. And they're still able to borrow money because it's Microsoft. A lot of people will go and buy their bonds. So I think this is quite interesting to see money coming out of big tech and going into the small cap companies. There's not a lot of small cap companies I get super excited about. I do think there's a trade here, but as far as long-term investments, I just don't quite see anything that is super exciting to me. I'm going to stick to the technology stocks. I guess the smallest cap company that I am involved in is going to be Enphase. and that's still, I think, a $15 billion company. But you can see they're getting quite the bid here because of the interest rates coming down. So you're going to see interest rate sensitives and smaller cap companies most likely continue to get some money flow if we keep seeing interest rates, or at least the perception that the Fed is going to be cutting soon because inflation's coming down, the jobs market softening, things like that. So I don't like to make forecasts, but when it comes to the Fed, I still think that they're going to want to wait until after the election so they're not seen as being political. We'll see if they get that opportunity to do so, or if something comes up before then that they have to come in and say, okay, yeah, we're going to cut rates because unemployment just skyrocketed and we need to stimulate the market. So who knows? The Fed doesn't even know what they're going to do. So we talked about the market rotation, Mag 7 taking a break, which is good. The Mag 7 has been just on a complete tear. They need to take a break. They need to digest these gains, and that money should flow into other parts of the market. Market still looks strong. IWM breaking out, which is great. We're seeing some less of the concentration in the market, but there was a little scare on Thursday. So that 2% drop, I think, caught everybody off guard because we saw the inflation numbers come in, and then the market shot up. Intraday, huge reversal. So we got some volatility coming back here, especially in the NASDAQ. Again, we hit all-time highs and just boom, sold off. And even today, towards the end of the last 30, 40 minutes of the market, a pretty large sell-off. So would not surprise me if we see a little bit deeper pullback. For me personally, not financial advice, do your own research, read the disclaimer. If we get a little bit of a deeper pullback, I'll be looking to continue to buy the NASDAQ, continue to buy the semis. I want to buy some more Amazon. I missed the boat on a good entry on Enphase last week. I was looking at it over the weekend like, okay, we're getting close. And it's up 20-30% this week. So I'll have to wait for another opportunity there. But I am ready for a nice little pullback in the NASDAQ, and I welcome it. So we do have earnings coming up, which is going to bring some more volatility. So if we see a sell-off in Google post earnings, I'll be right there. If we see Amazon take another drop, Bezos is selling a lot of shares, I will happily buy those from you, Jeff. Don't even need to put it in the market. Just we'll make a deal off exchange. So he should be selling some shares. He probably wants to go buy a new boat, and I don't blame him one bit. So I'm looking forward to some more volatility coming back, and I'm looking forward to earnings season starting up. We had some of the banks today, this Friday, and I believe Tesla is next week, if not the following week. I think it's next week, so we're getting close, and I'm excited. So bull bear case real quick. The bear case, inflation rate. We have 1 month of deflation. Now you may start to hear people worrying about deflation, right? Prices rapidly dropping. That is not good for if you're selling a good for $100 and now all of a sudden you can only sell it for $80 and then $70. Why are prices dropping? Is that because demand is weak? Is that because the consumer is weak? Why is that? So it'll be interesting to see prices, what that looks like. We could have an external shock and rates shoot back up. You never know. So I'm interested to see what is going to happen with inflation longer term. We know what's going to happen with inflation longer term. Things are going to be more expensive way down the road. But in this shorter term, medium term, are we going to keep seeing prices come down? Are we going to see them plummet? Are they going to steady out and rise again? Nobody knows. We're still watching commercial real estate. There's still a boogeyman out there in the financial world. There's been a lot of banks that are pretending and extending a lot of these horrible loans. We'll have to wait and see what that looks like. I don't have a lot of insight on it. I'll know when they talk about it on the news. This bank failed, and we'll deal with it then. That's just the world we live in. And then the Big Daddy Fed and the FDIC will come in, and they'll make things right. So we're looking at that, and we're also waiting for a recession. So again, as we're seeing prices come down, that could mean that profits come down and that companies lay people off and that people get laid off, they buy less stuff. We could start to see that. So we could be at the start of that cycle. And then the Fed comes in and cuts rates, and then there we go off again. So we're in an interesting spot right now. Like I said, I don't like to make forecasts. My guess here is that we see some weakness going into the election. We see volatility in the market going into the election. We see softness in the jobs market, softness in the consumer. After the election, the Fed cuts rates, and then we start the next leg up. But I think we are, if I had to make a guess, you put a gun to my head, I think we are mid-cycle, and we still have a long way to go. I think we've got a few really good years to continue to go, and then the next calamity will happen, and then we see a pullback, and then we recover from that. But do I think we'll see Tesla at 140 again? I don't know. I don't think so. I hope not. Do I think we'll see the SMH back under, where was I buying last? 80% lower? I don't think so. So I'm still here for the long term in these stocks. And if we get a nice reaction to earnings, I'll nibble, and then we'll go from there. So that is my forecast. Don't take that one to the bank. But I do think we're mid-cycle, meaning that we could see some softness, some shakiness, but I still think we're not at the end of some bubble and we're about to burst like 2000 and then we're going to have a 10-year flat market. I don't think that's the case. I think there's a lot of growth coming with AI, with cloud computing, with the creator economy, when it comes to just all the good technology that's out there in the world. I think there's a long way to push this market up before we see some real weakness. Again, I don't have a crystal ball. That's just my forecast if I had to make one. So action items, these are all the same. I haven't changed these. Have your shopping list ready. I've got mine. Amazon at the top of the list. I'm getting ready to start buying if we get a deeper pullback and this rotation that I was speaking of earlier intensifies. I will be the one buying the dip on that rotation. I have my cash position. It's ready. It's liquid. I'm ready to go. I'm limiting my spending personally so I can keep building this position and be ready for whatever happens. Selling options to hedge. Closed out my covered calls on Tesla when it had that death candle on Thursday. And I'm looking to sell some more if we can pop back up again. But again, not aggressively buying. Hedging options, we'll talk about that in another video. But that is all I got for you guys. Longer video. I'll try and make these under 10 minutes every Friday. But I hope you enjoy it. Again, I'm sweating right now. This is my third time making this video. If you enjoyed, hit the like button and leave a comment down below. Even if you don't like me, leave a comment. It all helps. So that's all I got for you guys. Have a great weekend. Try not to melt, and peace out.